In today's video, we are going to explore the Kaufman Moving Average Adaptive. So in yesterday's video, already we were studying this very moving average that you can see in blue here with a length of 100. The strategy was very simple. So the rule was the following. If I remove the EMA, for example, here, you enter when the daily candlestick closes above the blue line, and you exit the long when the daily candlestick closes below. So here, for example, in December 22nd, 2024. So you would have a long trade here of about, in the daily time frame here, 72 days. It usually generates trades that are very long in duration. So I recommend that you use the spot market for that. So if you want to see what length to choose for this very strategy, I recommend that you watch the previous video, so yesterday's video. And in today's video, I wanted to show you another strategy that I have discovered yesterday and which is based on the reaction time of the Kaufman Adaptive Moving Average. Maybe the adaptive word comes from that because yes, compared to an EMA, you can see that the blue line reacts way faster when the price is trending fast, when the trend is kind of confirmed. So yes, it's always lagging, but the blue line's slope is going up very quickly compared to the exponentially weighted moving average here in yellow. So we are going to explore a strategy that is based on that here today without going into the very details of it. But we are going to take a look at the results anyway. So if you don't know already, the very goal of this channel is to study, to backtest many indicator-based strategies and then to trade a well-rounded portfolio of these strategies in an automated way. So in order to build a trading robot and then to trade it using a crypto exchange, decentralized or centralized, it's your choice. And the idea behind exploring many technical indicators based strategies is very simple. I believe that there is a very smart idea behind each and every of the technical indicators that exist on the market, whether it is a simple moving average, an exponentially weighted moving average, or here a Kaufman Adaptive Moving Average. There is always a smart idea that the technical indicators author had at the time he created the indicator, and that's why I want to exploit to see whether or not we can build strategies rules that are based on these indicators that can perform well with a certain number of trades. We don't want too few trades, for example 5 or 10 trades over a 7-year long backtest period, for example here on Bitcoin since 2017 or so. No, we want a certain number of trades. Usually I filter in the strategies with over 100 trades at least, and then I continue to test forward these strategies in the premium member area, and then I calculate the correlations between the strategies' returns and then construct a portfolio made of these strategies that I can then trade live. So as a reminder what we did yesterday, here's the heat map in 4 hours where we use the very simple rule for this strategy where we enter along when the close price is above the Kaufman moving average, and we exit the long when the 4-hourly candlestick closes below the line. So the best length would be around these bluer areas. For example, here is the result for such a strategy with a length of 140. So the result seems quite good, but there are a lot of drawdowns and the performance would be quite flat since 2021, the first peak of Bitcoin. So we would do, yes, about 10x with a Sharpe ratio of about 1 and a quite good number of trades actually, like 342. So now let's take a look at the backtest for another length still in 4 hours. Here I selected a length of 300 for the KAMA, the Kaufman Adaptive Moving Average. Still the same strategy again. We enter along when the close price is above the line and we exit the long when it's below. So yeah, you can see that the performance is very good. It's like a 16x here with a very good Sharpe ratio as well. The drawdowns, yes, there are many of them, but because the return multiplier is very good, this might be a risk that you want to take. And a quick reminder of what we got yesterday for the same strategy, this time in 2-hour time frame. So the results, as you can see, were not very good, with Sharpe ratios usually less than 1. So we ditch this 2-hour time frame here. So here's what I asked myself yesterday after studying the first strategy. Why not try to make good use of the slope of the Kaufman Moving Average Adaptive? So that's what I did. I devised a strategy that uses the slope of the Kaufman Moving Average, and rather than entering along when we have a close price that is above the blue line, that's what I did yesterday. This time we enter along when we have a very good slope, when the slope is particularly high. And then we exit the long trade when simply the slope becomes flat again. So I've launched the backtests on this new strategy, and here in 2 hours, for example, the return multipliers are very good, as well as the Sharpe ratios that are usually above 1. So here's the heat map in the 1 hour time frame for this very strategy, where we enter when the slope is particularly good, and when we exit the long trade, so it's a long only strategy, when the slope becomes flatter again. You can see that there are two distinct yellower areas here for a length of about 30 or 40 and a length of about 160. So let's explore one of them. As you can see, the results is very good. The number of trades is over 100. It's actually 122. And the Sharpe ratio is 1.38. So a very good Sharpe ratio. So I would include it in my portfolio of automated strategies. And very quickly, I explored another exit rule, which is a rule when simply the slope is flat or simply returns to the normal slope, and in 1 hour still, with a length of 340. So at the bottom here there is a yellower area that I like. So let's take a length of 340 to do a backtest here. We get this quite nice equity curve in blue. So the multiplier is not so impressive. This is like an 8x over the 7-year long backtest period over here. The number of trades is like 142, so not bad, over 100. This is one of my criteria. This is just a variation of the previous strategy with an exit that is different. The entry rule is still the same. We enter when the slope of the Kaufman Adaptive Moving Average is sharp to the upside. So I want to end the video with the backtest I prefer so far. This is the backtest where we enter when the slope is an outlier compared to the previous ones. When it is very sharp, very high to the upside, we enter along. And when the slope becomes normal, even less than normal, we just exit the long. So pretty much you have my entry and exit rules here. The number of trades is very good, the Sharpe ratio is very good as well, and the return multiplier is exceptional. This is a strategy that I like and that I want to incorporate in my portfolio. So if you like the video, please hit the like button. And if you want to be notified of the future backtests that I will do, please subscribe to the channel. I see you in the next video. Bye bye.